Hey, everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for a market recap. All right, guys, we're just going to get right on into it. It's been quite some time since we've done a recap, couple months actually. We're going to talk about obviously the dollar, we're going to talk about the US indexes, oil, gold, silver, and of course, Bitcoin. And I'm also going to go over pretty much how we've done for the year, for the swing trades, the day trades, just kind of the whole general idea of how the lemon garden has done, which, spoiler, it's been pretty good. So let's just start off with the dollar chart. So dollar has been performing as we've expected. So if you've been following me for any amount of time, especially if you've been in the Discord where I do live streams very regularly, again, you can find the links to that Discord down below in the description. I've been talking about the dollar's just going to keep coming up. Now, where I differ from many people is that I believe the dollar will continue to rise, but so will everything else. That the inverse relationship between the dollar, the U.S. indexes, anything denominated against it, gold, silver, oil, well, technically not oil, but Bitcoin, crypto in general, in the end, will go up because, in my opinion, from what I'm observing with the dollar, but also more importantly with all the other foreign currencies, namely like the yen, the euro, pounds, etc., that they're actually collapsing against the dollar. So their collapse is what's fueling the rise on the dollar, not actual dollar strength, right? So if you go back and look at the charts, as we will here, you can see for pretty much since September of this year, the dollar's just pretty much gone straight up every week. It's had one fairly negative week in November, but quickly recovered from that. If you go back and look at the charts per se, let's just say like the S&P, for example, this does not reflect dollar strength because as the dollar has risen, so has the S&P, so has the Nasdaq as this loads up, right? So has the Nasdaq, so has Russell, right? And Russell, to a degree, maybe a little bit lesser because it's in a much larger consolidative structure, yet to actually break out and make significant new all-time highs. The Dow might be the only one where it had shown some weakness, but even still, it has gone up over time in spite of the dollar rising. So that inverse relationship that I've been talking about waning since pretty much beginning of this, well, pretty much beginning of this year, middle of last year, actually, has played out. And I believe that's going to continue to happen. Trump getting elected is only going to fuel this as well. He will cut rates aggressively, most likely. He will push for rates to continue to be cut. And you will see the dollar weaken on that. However, it will not weaken faster than the euro, the Japanese yen, the pound, etc. So you're going to continue to see this, and it's going to perplex many. Many are, if you look out into the internet sphere or the financial sphere, many are perplexed that why is everything going up generally when the dollar is going up? In my opinion, this is why. The dollar's not rising off of strength. The dollar's rising off of fiat death, foreign fiat death, in the world here. Okay, so the dollar's death is not good to go down. The dollar's death is to melt up. All right. So as we can see chart-wise, it's hitting the monthly bearish fair value gap. Will it respond to this? It will probably have some pullbacks here. Euro, Japanese yen, not going to get too deep into their charts. They're coming into places where you would expect them to bounce. But generally, we should see the dollar weaken out, and I say that with quotations, as we get more understanding of how aggressive Trump will be in cutting rates. But generally, you will continue to see the dollar go up as long as foreign currencies weaken, and I don't see that changing anytime soon. Okay, so let's get over to the U.S. indexes. Let's start with the Dow, and then we'll talk about Dow transportation as well. You always want to look at Dow and Dow transportation together. They're very powerful together. So looking at the Dow, Dow's been on an absolute tear. We've been coming up for a good, pretty much a whole couple years here. We're coming on 2 years almost now. And as of right now, we're in the midst of a good pullback, a very common pullback. I wouldn't say this is anything to worry about if you are heavily bet on the long side. But we are coming in to a place where we want to see demand if the daily uptrend is to be protected. So this protected low you see here, which is sitting at about 41,647, that is for the daily uptrend to remain relatively healthy. Now, if this gets taken out, again, it's not a means to panic. This doesn't mean like, oh, we're going to dump all the way down to like, 30,000. But what it does entail is that we're going to go into most likely a much larger weekly consolidation that's going to lead towards months of consolidation with potentially the bias to the upside. Now, the odds are the bias of that consolidation will be to the upside, but we would have to wait and see because there is a world where we do take out this low and then we recover, but we're creating a more distributive structure, which would be much more bearish. And this could be the relative top for this cycle up. It's unlikely, but it's always possible. The only thing you can do is wait for evidence. So we'll just have to watch and see. Now, if the daily uptrend stays intact, we're going to see generally, we're not going to see this low get taken out. We shouldn't even see it get wicked through, which that can happen, but you don't ideally want to see that. And then we want to see some sort of accumulation start to form here. So let's go down to the daily. Now, in my opinion, we've come and filled out this gap, but we have nowhere near enough evidence to see what kind of structure is going to form here. If we start to see a rising structure off of this drop akin to something like this, where we start to kind of grind higher, I would say be prepared for continuation lower for this daily trend to get taken out and will ultimately probably break back under 40 and come and sweep this low and start tagging around these lows. So about 38,900 give or take. That's if we do have a bearish structure and then it validates. Now, what can we look for upside, which I think is more probable, at least on the weekly perspective? The daily perspective, I don't have enough evidence yet. The weekly perspective is definitely clearly very healthy to the upside. But yeah, if we're going to find a bullish structure that's going to lead towards an accumulation to then continuation, we're going to want to see something that's going to be more even, almost like an even market, like an even range, or you're going to want to see something that's kind of squeezing downwards. So in other words, so you have a nice move down, pop up, and then you start making lower highs and slight lower lows, something like this, okay? And then you want to see a pretty nice impulse at some point to take out one of the highs, if not both, and then a nice pullback that leads towards a higher low. So pretty much a market structure shift and then a validation. Okay, so that is generally what we want to see, but as you can tell from the drawing, we are nowhere near at this point, at this time, knowing where we're going to be at. So all you can do is wait to see what emerges, and then we can make our decisions from there. Let's quickly touch on Dow Transportation. So Dow Transportation is also quite bullish. It's come back towards the breakout zone, which is very, very normal. Dow Transportation, if this stays bullish, that means it's very likely Dow is also going to stay bullish. Dow Transportation finally potentially broke out of this bullish, this consolidation bullish. We'll see if we can get validation by essentially coming back, making this low, and then coming up to take out this high. That will completely validate the break and not have a false breakout, which could do something like this. If something like that were to happen, then we should be, we'll probably be very clearly on a much more bearish track that will probably lead towards the end of the uptrend on the daily and weekly perspectives. But again, very, very low evidence of that right now. If we hold this breakout as we're attempting to, and we swing back up on the Dow Transportation Index, then it's very clearly going to just lead to continuation everywhere. So if Dow Transportation and Dow Jones are both going up, both singing the same song, the whole world will also be in the chorus of that same song, okay? So everything looks pretty good as long as we can hold out on this consolidation and specifically not come out and take out, these lows here. So if we start doing that, it's pretty much game over for this trend up. All right, next is S&P and NASDAQ. I'm going to touch on them really fast. There's not really much else to be said here. Very bullish, very strong in the midst of a pullback, a normal pullback. We're probably going to see a move further down, at least back to 5,700. I would be shocked if we don't sweep out these lows. But there is a possibility we don't if we're going to be extremely impulsive. But I would look for at least a move to 5,700, and then potentially even a further move down towards about 5,500 over the next, I want to say, 2 weeks of January. But there is a world where we don't do something like that, and that would be a very impulsive world. But there, it's there. But the probabilities right now, just looking at this, we are in distribution. We've been coming up good, but we've been grinding up, right? So you have a nice move up, and then you start grinding higher. And notice how the highs are starting to kind of get real close together, and then you got the lows. We're coming back into these lows. You're going to likely see a breakdown if we're in a bull run, which we are. Distribution tends to be very stunted. So, you don't always get that big move down that leads, coming back all the way down, going after the major lows. It doesn't always happen. To be honest, it usually doesn't really happen in the midst of a healthy bull run. At most, you can maybe get a low out, maybe you can get two lows out, but it's pretty tough to counter the demand if you're looking for that sell. But when you are coming towards the end of a trend, you will obviously see a massive move down during distribution because it's usually marking either the top or at least a major local top that will then go into some sort of major accumulation or some sort of consolidation. So we don't know, but what we do know for sure is that we are likely in distribution just from this price action structure, and that when we take out this low, if we take out this low, we should at the very least see a move back down to 5,700, and then from there we want to wait and see what kind of price action starts to form from there. And guys, if you're getting anything from this video, my advice is don't front run the trend. Wait for the price action to tell you what's happening. Don't try and impose your ideas that it's going to definitely happen this or that. Just go with the probabilities, see what happens, and if it happens, great. If it doesn't, just be vigilant and nimble enough to adapt to it. Okay. So same thing with the S&P. Ultimately, very bullish on the Nasdaq. Weekly, monthlies, very strong. In the midst, probably here, of a weekly pullback on everything from the Dow to the Nasdaq. We are in a form of distribution here on the Nasdaq, just like we are on uh, on the S&P. Probably going to see us. I drew that horribly. My apologies. Yeah, I'm not an artist. Probably going to break down, and I'm just gonna. You can draw it. So probably going to break down, and then we want to see again. Got this low here. It's going to get taken out, and then I would look for a move sub 20, going to take out these key lows right here. So anywhere between about 19.9 to 19.6, 19.5 in that ballpark, and then from there you can definitely start getting some demand to flow in. We might see something akin to this where you pop up and then you start building out an accumulation structure over time. Now, this can take a really, really long time. We're talking a couple weeks on a pullback and then a couple months on this accumulation. All right, it could be a really, really long time. I'm of the belief that this uptrend is going to last a really, really long time. And when I say really long time, I mean about 3 years. So I believe 2024 was the first major year, I guess 4 years actually, because 2023 was an uptrend too. But I think by the end of 2026, we might see some resolution in some things, and that might be the marker of where the uptrend probably starts to break down the bull run. But again, it's just an idea. It doesn't mean I'm going to be right, and I'm not trading it. I'm just trading the chart. But just keep that in mind. I think this uptrend, this bull run, is very healthy, and it's probably going to keep going for quite some time. But just wait until the trend is over. Wait till it proves to you it's over. All right. All right. Let's go over to oil, and then we'll look at gold and silver, and then we'll touch on Bitcoin. So oil's been pretty interesting. Um, oil's been really interesting actually. Oil's actually held out in this zone a lot longer than I thought it would. I had expected for it to eventually get up to the 80s before coming back into the 60s when we were like over here. So it has underperformed my expectations, but it's actually quite interesting because it shows the strength of essentially Donald Trump and kind of what he wants, right? So he's been very adamant on wanting a low oil price, which is politically very intelligent. Low prices, it sets him up for his economy where everything can get really cheap. And then he also wants it low because he's going to be able to negotiate it probably even lower, or over time with OPEC, as we in the U.S. Start to emerge again as an exporter of oil. That seems to be the path he wants to take. So this has been pretty interesting. And it's also really intelligent to keep the prices lower as well, just to kind of keep Russia from profiting too much on the war. So it's been a really smart play. I think where I went wrong in my idea that we would come back up to I was looking about 86, is I think I overestimated how bad the supply of oil would be if the wars continued on. But yeah, I underestimated just how well the supply has been, So that is here, no there, but it has helped this zone way, way longer than I thought it would if it broke down from this structure here. So we're clearly getting demand in here. I'm actually quite bullish just looking at this. As you can see, we've had a nice move down. We actually had a really nice move up, and then from there, we've created a pretty well hidden demand accumulation structure here, where we kind of grinded lower, popped up, and now made a higher low, and now we're starting to pop up here. Right, so this has actually been quite bullish here. I think we're probably going to get back up to about 75, just looking at this zone here, the upper blue zone coming back towards the trend line. But if we actually are just going to start a new uptrend on the daily, essentially from here, then you're going to see this high here at 78.50 get taken out, which I guess would bring us to the general zone I was looking at for, beginning middle of this year. So it could be that I was a little early on what I was thinking, but overall, as long as we're in this blue zone, so between 76, 77 to 62.50, you're pretty much in the golden zone of good pricing for oil, like optimal pricing currently for gas. This is the zone you want to be in. So the longer we're here, the better it is for the economy. Um, but again, the wars are still going on. So unless that changes, I still have to stick to my original thesis that eventually the supply will start to contract enough where price will have to meet that demand, right? So we'll see what happens. Maybe I'm wrong on this. But it's fine. I'd rather be wrong on the oil chart, because if expensive oil happens, that means a very hard time for the majority of people in everywhere, really, specifically the Western countries. So if we can keep it relatively cheap, then I won't be complaining myself. All right. Next is gold and silver. So gold going into a consolidation, right? So I had been looking at gold. This was showing early signs of a distribution structure. It actually broke out of that, so it didn't really validate this structure. This was more of like a projection. So it broke out of that, and then actually came back to test it, and then had one more gasp, and then finally, pulled back. And this is really, really a long time coming. Gold has been on an absolute tear for a couple years now. So this is what you want to see for healthy continuation. I think we're still quite early on in this. Like, this is not going to be going up again soon. We're going to be waiting here for some time, but it's still relatively bullish. The uptrend is still very healthy, especially from a weekly perspective. You're probably going to see this over the next couple weeks to months tighten out more and more. Okay, now my tune will change if we continue to make these higher lows, but we also start to stab up here and then pull back again. Right, we start doing this, then we're going into a much larger distribution structure here. And then I would say, okay, pack your bags. We're going to get all the way down to here, about 2300 to 2400. Okay. So if we do start to see this, so if you see these highs get swept and then they're quickly pulled back and then you make another higher low, be on alert, because there's a good chance you're in a pretty big distribution that's going to lead towards a pretty sizable move back to around 2400 and potentially even lower. You could easily see it take out these lows at 22, 23. So just be on the lookout for that. Now, if the dollar continues, the buying power, everything keeps decreasing, that will help stunt the drop on gold. But gold is very, very, very extended. I mean, it's come up a lot. and it hasn't had a really decent pullback since over here. So September 2023 had some stuff here you could say, but not really. I mean, September 2023 was the last like sizable pullback it's had. So it's been a long time, over a year, over a year. Yeah. So be on the lookout for that. Next is silver. So silver, very, very interesting. It's just such a it's just so it's so like so stunted. It should be outperforming what it's done by so much more, in my opinion. But yeah, and we all know if you've been in the silver market or you've been watching it for a long time, this asset doesn't trade like a rare metal, trades like some sort of industrial metal. There's clearly a lot of control on the pricing here. I would actually say this one's quite bearish looking. It's nowhere near as bullish as gold is currently. It's one of the more bearish looking commodities. It's it's definitely not giving any signs of demand here. I would look for another move down to about 27.68 and then probably break a bit lower, going towards about as close to 27 flat as possible. I do not foresee this low getting taken out yet. You're probably going to get another little pop up around 27 flat to about 28 flats, we'll say. So this zone right here, draw a little rectangle there. So this zone right about here, give or take, is probably going to be a bounce zone. Just looking at it from a structure perspective, you might get your little head and shoulders if you like that look. Um, yeah, but this low here, the reason why I say there's going to be a bounce here is this is the protected low right here in this uptrend. So you're going to get demand coming in to protect the low at $26.44. I foresee them failing because gold doesn't look impulsive enough to drag silver up. Okay, so you're probably going to get a failure on that protection, but you will most likely get at least a temporary bounce. And if you like, the head and shoulder structure, you'll probably start forming something akin to this if what I'm seeing um, plays out. Okay, so just be on the lookout for silver. Gold and silver are definitely on the more bearish side, short term, short midterm, but longer term, especially gold, I would definitely lean towards being a lot more bullish. Um, yeah, and it should. I mean, it probably will just drag up gold if that ends up playing out. Let's take a quick look at Bitcoin. So, as you can see, I have a lot of trades here, a lot of swing trades. These are a lot of trades I've been in for quite some time. Some have just been a couple days, some have been a couple weeks, some have been a couple months, some have been over a year. But thankfully, by the grace of God, pretty much almost all these trades we've all, taken money off of. They're all free trades at this point. So, that's really nice. And I'm pretty confident that Bitcoin will see more upside. Crypto in general will probably see more upside. So just going to sit tight in them. If you're interested in the swing trade service, you can find the details down below in both the Discord or the Patreon. The links are down below. But let's take a look at Bitcoin. So Bitcoin, I've sold the majority of the position. I still have about 25% of my original position in. As you can see, I have these 2 points where I took 50% here, I took 50% here. So I have about 25% of the position here. It's been pretty interesting. Bitcoin went into a distribution model, finally broke down, but like I said, when you're in a bull market, what ends up happening is when you're looking at distribution, you don't always get the massive move down. Now, this could definitely happen. I have 86,000 marked because that's the general zone between 88 to like 85,000. Like I've generally see price could getting there pretty easily, but what you can't underestimate the strength of a bull market, right? So like when you see like this low here get taken out, and then price starts to get demand, this that could be it, guys. I'm not saying it is, not saying that, but I'm just saying in a bull run, this could be the pullback. All right, and you can't underestimate that. Um, that's just how it is. Sometimes you only take out one of the lows. Sometimes you take out two of the lows. Sometimes you don't even take out a low, which is pretty rare. But when you go into distribution, you want to see how price reacts to these lows as it comes into them. And every time Bitcoin has come into these lows, it's, as you can see, gaining demand, right? I do foresee Bitcoin personally, just looking at it, the probabilities are higher that it does come lower towards about the mid 80s, maybe even the high 70s, like, 77, 78, 79, give or take. But other than that, the uptrend is extremely healthy. There's really nothing here telling me to be worried about the overall health of the uptrend. We're in a standard distribution model that has validated. Now it's time to see how low can we go. This price action here that we did from essentially was this March, right? Like March of 2024 all the way until we broke out here in October. This is extremely bullish. And if you go back into my catalog of my recaps, you'll know that while we were on here, I was talking about be bullish, buy stock, buy crypto, get in positions. I shared that what we were doing in the garden was getting long, accumulating positions, because this market structure was highly bullish, especially after the August 5th capitulation, right? And I had said, like, when this happened and then we made the higher low here, this was a massive sign to start getting long, right? Start getting long. And now this market structure, what this market structure implies is not a multi-week, multi-month move up. This market structure, this was about 10 months, almost 10 months of an accumulation. These structures, they tend to propel price for much longer, okay? Much, much longer. If you go back into the equity markets, you can see many stocks that have these sort of structures. Tesla's doing one right now. Meta's done one. Apple's done one in the past. Microsoft, etc. Some of the biggest blue chip names you could think of, they've all had structures like this that have lasted years. Like it took them 2, 3 years, 5 years to create these market structures of demand and then validate them. I think Tesla's in one for like 2 years now. Bitcoin did it in less than a year, which isn't surprising. It's faster, 24/7 market, trades on the weekends. But that also means that this implies much longer to the upside as well. Okay, not just a couple months, guys. All right. So if you're long, just watch the trend. Don't let anyone, including myself, sway you from watching the trend. Just keep your eye on the trend. The trend will tell you when it's the end, and then when that happens, you can make your decision. Uh, to adapt to that. But if you don't really understand that, you're always welcome to Discord. I do streams. I always talk about it. You'll learn quite a bit if you're interested in that, especially market structure. Yeah, and yeah, so that's it for the recap. I just want to quickly talk about the Discord actually. So let's open up that Discord. So yeah, just finished off the year. So this is the day trade. We'll talk about the day trade room here. So these are all the trades we've taken um, in the day trade room. As you can see, this November. Again, you can go through the whole history. This is open for everyone to see. It's in the closed positions day trade room right here. And we just finished off December. I'm not trading today. So December was a great month. About 88% made on the month with a very low win rate, right? So you can see it here. Again, I share all this. I trade it live with anyone in the group. If you want to join the group, you can find the details in the Patreon or in the Discord here. But yeah, I do this to show that you really don't need a high win rate. A high win rate is secondary to profitability. Like you need a profitability, a good RR. That's all that really matters. Yeah, win rate is great. This is actually well beyond my average. Usually we're doing like 30%. Like this was actually a little bit below average on November. Great month as well. Made 52% on the account. Okay, really really good month. Here I'll show you like this. Like this is the average. Okay, like this is what you can expect from my trading style, which is pretty much a standard breakout system. Okay, like just breakouts, and I do nothing proprietary. And I'm sharing this because I want you to see you don't need to do anything proprietary to make money. You don't need a high win rate. You just need to know how to hold your winners. Make as minimal mistakes as possible. You're gonna make mistakes, but make as minimal mistakes as possible, and just have an edge that repeats itself. That's pretty much it. But if you're interested in any of that, I can just join the Discord if you haven't. I do streams, like I said before. I have a bunch of services, swing trades, day trades. I do a tutoring service as well, where I go more in depth in everything I do myself. And yeah, that's it. So yeah, I just wanted to finally do a recap. It's been a couple months, and I've been procrastinating, and just been busy with life. But I hope everyone's have had a good year and is having a good month. And I pray that we all have a great 2025. Um, yeah, that's it. So, guys, thanks for hanging out with me. It's been, what, 3 years since we started the Discord? It's insane. And here's hoping we have another 3 beautiful years into the future. All right, guys. Remember, be patient, be vigilant, and be nimble. I love you guys. Take care.